Hey guys, welcome back, and I hope that you had a chance to see my video that I published earlier today, and that was a recap of last week's price action. It's really important to look at last week's price action to see how we got to where we are and see how we can do things better. And it looks like right now I'm sitting here with futures ES down 1.41%, NQ down 2.42%. It looks like the market is wanting to extend some of those losses from last week. In my opinion, we are very overdue for a really good correction. And let's see if we can dive deep today and see maybe where we can find some bounces and maybe take some good trades. As a day trader, this shouldn't scare you. This should get you really excited about the awesome potential trades that you can take when volatility is high. So I am very bullish on volatility, and VIX closed on Friday up 25%, and of course we did see it closer to 55% during intraday trading. And VVIX, I don't know if you guys track that, but VVIX does a really great job of showing future volatility, and this is the highest I've seen it in a long time. Up 23% is projected for tomorrow, and that is huge. We have not seen a volatility spike like this all year. If you got really comfortable trading with low volatility and low volume, that's another thing definitely keep an eye on, is volume, then this is going to be a lot trickier. This is way different than trading low volume and low VIX. So let's get started. SPY, the implied move for tomorrow is between 525 and 541, and that is from options, and that is actually from options as we closed last Friday. So right now we do have to be mindful that volatility is even more elevated than where we closed on Friday. So while it's okay to take trades mechanically, also make sure you're paying attention. So 525 was the bottom of the implied move for tomorrow, and 541, and that is for tomorrow's contract. The 30-day average volatility actually agrees with that. And on Tuesday's contract, 523 to 543, and to the upside, the first levels to look for if we do find ourselves in the green somehow tomorrow is the 35 EMA. And that is going through the top of the implied move. And then right above that, we do have this gap right here. This is the rest of the FOMC gap from June, and we gapped underneath that level. Sorry, let me fix my chart here. We gapped underneath that level on Friday. So we have an up gap here. That up gap is the rest of the FOMC gap, and the down gap is from Friday's down gap. So we do have an island top right above the 35 EMA. If we do find ourselves near the 35 EMA, I personally am looking to that as a place to go short. And then the top of the implied move for tomorrow is 541, 543 on Tuesday's contract, and the 50-day moving average, which we had a really hard time holding last week. The volatility was wild around it. We have that at the top of the implied move, above all of those gaps and above all of that resistance. And then underneath us, we do have the 4-hour 200 moving average. Taking a quick look at ES right now, it is down 1.32%, and if we open anywhere near that, that's going to take us down to the very bottom of the implied move. And let's take a really quick look at the past few weeks where we have gapped completely outside of the implied move. And the first one was right here, where we gapped down completely. It was an island top off of all-time highs. And what happened when we gapped completely outside of the implied move is we followed through on the direction of that gap. Same thing happened here. You guys can go back and watch the videos and see that it was the entire implied move that we gapped under. So we opened underneath it and we pushed down. This one right here was for FOMC. We gapped up completely outside of the implied move, so gap up and push up. And then we had this one right here, gap completely outside of the implied move, and then push down to the 4-hour 200 moving average. So where futures are right now at 525, if that pattern continues, what we've been seeing is gap down and then find the nearest support. So where is the nearest support underneath our trading range? And that would be right around here. and that was support back on May 31st, and that was right here, and that is around 518. And of course, I'm not saying that's what has to happen, but that has been the pattern in every situation that we've had. When we gapped down here, we found the 50-day moving average. When we gapped up here, we took it to the 30-minute 200 moving average. So that's just what has been happening. And you don't really want to be catching a falling knife outside of the implied move like that unless we're at a support level. Super treacherous trading range for tomorrow, guys. If you are newer, definitely be careful. And if you've been doing this for a while, you know you're excited. All right, so that was SPY, and then taking it over to SPX. And in SPX, the trading range is actually wider than in SPY. And that is because options on SPX will adjust as soon as futures are open. So that gives us a little bit more accurate of a reading as opposed to SPY, which that is where we closed on Friday. So SPX, we do have an implied move over here between 52.50 and 54.45, and that is from options, and the 30-day average volatility is actually in here. It's a bit lower. And then on Tuesday's contract, 52.30 to 54.40. So really wide ranges, and to the upside, the first level to look for is going to be this gap right here. That is from FOMC in June, and we did close a little bit of that out here with this tail, but we left a little bit open. I just didn't adjust it, so it's a bit smaller of a gap, but it is there and could definitely be a resistance level. Then we do have the 35 EMA about halfway down the implied move here. And the 35 EMA is a really important level. It does tend to define the up or down trend, or at least it is a strong resistance level. What am I trying to do? Okay, so we have got that 35 EMA in right here, and that is right there at that gap. Above that, we do have a little gap right here. That is where we did see support this week right before FOMC on that drop. And I am missing something. We have the down gap from Friday as well. So we have two gaps that go up and one gap that goes down. So we have an island top, so some pretty heavy resistance to the upside, and then just outside of the implied move tomorrow is that 50-day moving average. And then just at the top of Tuesday's implied move, we have the 30-minute 200 moving average, which just made a bearish cross down on Friday. And keep an eye on the direction of the momentum. 30-minute is pointing down, 1 hour is pointing down. 50-day moving average, this is the flattest it's been in a while. It's still slightly pointing up, but after tomorrow, it definitely could be flat. And then the 4-hour 200 moving average, which is pointing up. So that 4-hour 200 moving average is to the downside. We also have a gap right here, and that goes back to, I don't know where it goes back to. Okay, so it goes back to right here. We gapped up, and this is on June 5th here, and that's right after we found this support after a pullback here. So the pullback that we saw end of May, that was the support right here at 51.90. We rallied a bit, and then we saw a up gap here. So that could be a support, and you could see there looks like there was a bit of buying further back right there. So definitely some volume at least. So that gap, bottom of that gap is at 52.88. And then the bottom of the implied move for tomorrow is 52.50. And then on Tuesday's contract, 52.30. And this one definitely could be a little bit more accurate than SPY. And if you want, you can take the percentage. So on tomorrow's contract, SPX is expecting a 1.78% move. And on Tuesday's contract, it's expecting a 2.16% move. And I'm going to switch it back to SPY, and this says 1.34. Yeah, so this is much more narrow, and 1.78. So just being able to see the options in advance right now with the overnight VIX spike, you may want to use SPX percentages if you're trading SPY, to choose a better strike than maybe what Friday's close gave us. But it is what we have. So that was SPX, taking it over to QQQ. And in QQQ, the implied move is between 440, let me get my arrows, 440 and 457, and that is from options. And the 30-day average is less than that, so we're expecting really big moves tomorrow. And then 436 to 461 on Tuesday's contract. To the upside, we do have that 35 EMA. Always should be on your chart because we revisit that level often. If we gap down, then that 35 EMA will readjust and give another target. But always just know where your 35 EMA is. Right now, it is about halfway down the implied move. And then we also have this down gap from Friday, taking up the top of the trading range, and then also that 4-hour 200 moving average, which we did lose. We gapped underneath on Friday. And let me just check, just making sure it was the 4-hour. 4-hour 200 moving average is at the very top of the trading range for the next 2 days. And just to be fair to the bulls out there, we do have a lot of bearish signals in this chart right now, but the 4-hour 200 moving average, the momentum is still going up. I'm not saying that that alone is enough to change the trend. Right now we are seeing lower highs, lower lows, but we do have a little bit of positive momentum here on the 4-hour time frame. And then way outside of tomorrow's trading range, the 30-minute 200 moving average is kind of locking in this down gap right here and this previous resistance, and it was actually a previous support. So we are locking that in and making it more and more of a less likely chance that we get up to these levels as this 30-minute 200 moving average comes down. And then underneath us, we do have the this support. Zooming out, that goes right here. That goes back to May 31st. That is also where we saw support in SPY and SPX. And then the bottom of the implied move is at 440. Bottom of the implied move on Tuesday's contract is 436. We also have this gap right here. That is, so this gap right here, and that was right after this monster gap that we saw in early May. And then we also have this 35 EMA, and I have a feeling this 35 EMA, I don't know what time frame it belongs to, but I think it is on the weekly. Let me see if I'm right. Yes, that is the weekly 35 EMA, and I haven't adjusted in a while, so let me just do that real quick and see how that shows up in the analysis once it's adjusted a little bit here. So like that, and let's take it back. So that 35 EMA on the weekly time frame is just underneath us. Really interesting to see that there. I didn't see that one, but let's see how it reacts, because it's been a really long time since we got underneath the 35 EMA on the weekly time frame, and it has been, let me switch back over to that time frame, it's been defining this uptrend since we saw October lows here. Even further back than that, this is actually the bottom of January 2023 right here. October lows was a bounce on that 35 EMA right here. So it actually has been a really long time since we broke underneath that 35 EMA on the weekly time frame. That is a huge level. If we do get underneath, that is a mayday signal that we may end up hitting this bigger 200 moving average, but that is looking way out into the future and definitely not a day trading type of thing. So then taking it over to IWM, and then taking it back to the 30-minute time frame, the implied move for IWM is between 204 and 214, and that is from options. And the 30-day average volatility actually aligns right with Tuesday's contract, which is 203 to 215. And to the upside, we do have 211, which is a really long-standing resistance in IWM. We're going to take it back to the 5-year time frame, and this red line right here, that is where we saw previous support. This was in 2021, and then in 2022, 2023, and right here in 2024, we saw 211 as a resistance. So when we broke out just recently above that level, that was a big deal. And then we popped up, closed out this bear gap that came right before we broke underneath that resistance, and then that bear gap sent us flying back underneath 211. So really big resistance right above us at 211. And then not only do we have 211 as a resistance because it has been a long-standing resistance, look at this above us. We have two up gaps and a down gap, which is an island top. That is a very strong resistance pattern that could definitely hold us down. But we also have the 1 hour 200 moving average in here. We also have the 35 EMA coming in from the top. So we have a ton of resistance above us, above that 211 level. So underneath us, we're sitting right on top of the 50-day moving average. With everything going on in this chart, it's really hard to see the 50-day moving average, but it's right there. And let me lock it into place. Underneath that, we do have this up gap right here. And this up gap goes back to where we finally broke out. We just got the 35 EMA here above the 30-minute 200 moving average. We were fighting for that level here, and then we finally gapped up, which is what set us into motion for that big rally. But look at this, we do have futures down, and I don't have Russell futures up here, but if they're anywhere near ES or NQ futures, and remember, Russell has been the most volatile index here, so if we gap underneath this right here, that is going to give us another island top, and it's also going to cancel out this entire rally that we've seen for the past 3 weeks. So as an intermediate to an advanced trader myself, I am even looking at this trading range and cringing. I would much rather wait and see what happens here. We're at a critical level at the 50-day moving average, and I honestly would absolutely probably not trade this tomorrow. And that's just me. But if you guys are, this is your trading range. And then taking it over to DIA. And DIA, based on how we closed on Friday, the implied move is between 389 and 405. And that is from options, and DIA only has weekly options. So the 30-day average volatility is right here, and that is what we're using for tomorrow, and keeping an eye on the weekly expected move as well. So 393 to 402 is the implied move for tomorrow. 30-day average volatility for tomorrow. And remember, that is based on Friday, and I'm just going with the numbers. But if futures are down anywhere near where they are in ES or NQ, then we're looking towards the bottom, and a lot of these levels here would be to the upside if we do start to climb back up. But I'm going to read it the way it is, and then just pay attention to where we open. So to the upside, the first level, 1 hour 200 moving average. That 1 hour 200 moving average, the momentum is still up. Another good down day really could turn that. And then we have the 35 EMA just above that. And let me actually go ahead and put that in. 35 EMA. And above that, we have the down gap from Friday mixed with this up gap from the previous week. This is where we opened. Is it where we opened? No, this is the week before last, Thursday going into Friday. So that is the gap that really pushed us into having this other move right here. And then we just gapped down and under it. We did push into it just a little bit, but then ended up dropping. So island top gap right here at the top of the 30-day average volatility, about halfway up the implied move, and then that 30-minute 200 moving average, that momentum has already shifted to down. And you can see that level was a previous support, certainly could be a resistance if we find ourselves up there. To the downside, we're sitting right on top of the 50-day moving average, just like in IWM. So 50-day moving average across most major indices is going to be in focus this week for sure. QQQ, we actually dropped below it a while back, and then we dropped underneath the 4 hour as well. So the 50-day is long gone in QQQ. But in IWM, in the Dow Jones, in SPY, we're right near that 50-day moving average, super critical level. And then just underneath that, we have the 4-hour 200 moving average. So just keep in mind that we could gap underneath that 4-hour 200 moving average. I actually haven't looked at DIA on the 4-hour time frame. Maybe let's hop over there for a second and see if there's anything to see. The momentum here is down on the 4-hour time frame, so I would expect that 4-hour definitely to get hit. So then maybe we could add this level right here. That was a support from earlier in the year. Where is this? April, May, June. So that was an uptrend right here that we could maybe add to DIA as well. And maybe as a place, since DIA tracks the overall market, maybe as a reference point for the other indices. So, all right, so that's something we added into the mix. That is the uptrend, and my uptrends are dashed lines. So let's fix that. And guys, I am in the middle of a tropical storm, and I think this is what I've got for tonight. Hopefully this covers everything that you could possibly imagine. Look at this though. This is such a wild trading range. I'm really excited. This is going to be really fun. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.